Hello everyone, today is Thursday, May the 2nd, 2013. So the first one on the list here is natural fuel gas, NFG is the ticker. And for the year 2013, the estimate was $2.94. They're going to do a penny better, up to a dime or 15 cents better than that. Let's go look at the actual event, and you can see here that they did in fact announce this morning. And we can see down here, if we look at the news, that they said they were going to beat by 4 cents, and they did beat by 4 cents. Big surprise! A whole, 15 minutes before announcing, they give a pre-announcement saying we're going to give you better numbers than we thought 15 minutes ago or something. I don't like these, and yet they are plentiful. There's so many of these out there. Let's keep moving. Let's go over and look at a chart. And we can see here on the yearly chart that this thing has been climbing, humming along pretty good. Let's drill down and look at a little bit shorter time frame. And we can see here that it has remained relatively flat through their earnings announcements, which tells me nothing more than any increase in the underlying value of the stock has been figured in already, which is pretty common. I mean, this is what we typically see when we have all these announcements given 10 or 15 minutes early. And so there's not a lot that we can do with it other than it's worthy of putting on a watch list. It's worthy of putting the name, putting the chart on the sidelines just to see what we do as we move into the next quarter and see how this thing is performing. But I don't see a trade here. So let's go back to our list. And the next one on the list here is CEC Entertainment, ticker symbol CEC. And in reference to 2013, the estimate on the street is $2.69. You can see right here, they're claiming they're going to do between $2.80 and $2.95. So recent, it's a reasonable jump up for them. Let's go and see what their event is going to look like. And we can see here that once again, they announced this morning, coming out with guidance a few minutes before the actual announcement. Nothing we can do with here. But once again, it's certainly worthy of looking at a chart. I mean, we are in the business of trading, and you got to kiss a lot of frogs to find your handsome prince, I guess. So let's go over to a chart here, and we can see on the chart that this thing is pretty sideways and has been for almost a year now. And so based on the year chart, it's not one I'm terribly interested in trading. Let's drill down and take a look at the shorter term chart. See if there's any short-term money in here. And once again, it's pretty flat. We have some reasonable volume down here in terms of picking up this stock. There is a little bit of buying going on, but this is not the big influx of institutional money that I typically like to see. And the next one here is our old friend Weight Watchers, WTW. Instead of the street estimate of $3.59 a share, they're going to do a whopping $3.60. Could be $3.90. If we click here and see their event, we see that they also announced this morning, like pretty much everybody on the list did, and they came out the morning of, said we're going to beat by 27 cents. Now, the thing to remember here is just in the same way that we cannot really use these 11th hour upward guidance advisories, neither can the big institutional board. And so it's essentially an example of a company, if anything, it's being mismanaged, because they can't tell you within 30 cents a share what they're going to do next year. And just like that is distasteful to the hardcore fundamental analyst, it's distasteful to the fundamental analysts working on the street, working for the big institutional firms. And so I can, without even looking, tell you what this chart is going to look like, but let's see if I'm right or wrong. And the year-long chart is a stock that has been hammered as of late. This actually is a little bit surprising. I'm going to go ahead and say it. I'm wrong. This does not look exactly like the chart I anticipated seeing. Let's drill down a little bit. Stock in a downtrend. Pretty strong downtrend going on here, but as far as the 5-day chart, still nothing here, nothing we can really work with, no pop on earnings. Reasonably high volume bar today, went as far down as it did up. And so it's just not the kind of trade that we can, with a great deal of confidence, tell you that institutional money is rolling into. And so we just take a pass. We just hurdle over this one. So if we go back to our list, and the next one on the list is Mohawk. MHK is the ticker symbol. Estimate is $1.52. They say they're going to do $1.58 to $1.67. And once again, this is one, since we're at the end of the second quarter, this is obviously one that was given this morning. But let's go over and have a look. And we can see that, yes, their announcement was in fact given this morning. And we can see that they just got it above by 3 cents. They beat by 3 cents. And so once again, not something we can use. So we just keep on moving. And so once again, probably not something we're going to be able to trade, but hey, we always look. So let's go over and have a look at a chart. And on the year chart, we can see that this is a company in a nice, steady, healthy incline. They've been moving up for quite some time now. It looks like they have recently, in April, hit a couple of new 52-week highs. And so let's drill down and have a little bit closer look at this chart. This is interesting. This is why we look at every single one of them. But as we look at the 5-day chart, we see that we are in a little bit of an interim decline. So it could well be that these new 52-week highs are just indicative of a double top, and that this is beginning to go the other way. If we look down here, we see the drop through the course of the day today was on relatively high volume down here. And so this appears to be a little bit of a profit-taking event. And thusly, I don't really see anything that I would be interested in getting involved with Mohawk today. But hey, it is in an uptrend. If we go back and look at that year chart again, and I don't want to take too much time because we're going to be kind of a long video today anyway. But if we go back to that year chart and have a little closer look, we see here that this 52-week high followed by this near 52-week high, slightly lower than the previous one, and you guessed it, that makes it a double top. That's why the institutional investor is not terribly interested, because just the same way we look at technical analysis, guys, these boys do too. They are reading the same charts that we're reading, and this smacks of a double top. Might be worth throwing on your watch list, though. It looks like if we were to get above 118 bucks, right? 117.96. So anything north of 118, and this thing's going to keep on climbing, and we would have to reevaluate it at that juncture. For me, though, it's not one that I have traded before or regularly trade anyway. So let's go back and look at our list and keep on fishing here. Okay, we can see the next one on the list is Fleet Core. FLT is the ticker. Instead of 368 for the year 13, they're going to do between 370 and 380. And I'm guessing that they announced this morning. Let's go look at the event real quick. And yes, in fact, they did. They announced this morning saying, hey, we're going to beat by 7 cents. And guess what? They did. They beat by 7 cents. Doesn't really take a crystal ball to be able to make the determination 15 minutes before you actually announce. And so I'm thoroughly unimpressed. Nonetheless, let's go and have a look at a chart. And the year-long chart for Fleet Core is indicative of a company that has been screaming northbound. I mean, this thing has been screaming up. It's had one heck of a good year. If you look down here, you see that their low is in the neighborhood of $35. And today they are hanging out around $77.25 as the high. That is a huge swing, my friends. Let's look a little closer. Drill down and look a little closer. Pull up our all too popular 5-day chart. And on the 5-day, this has been on a little bit of a run. Now you'll notice that this does not look like the chart we're typically looking for. And so you'll notice that I'm not terribly interested in trading this one either. If you look right here, you see that the 50-day moving average, simple moving average, is trading above the 200-day simple moving average. And it seems to be diverging a little bit. It's moving away, and the 200 is going to have to come catch up with it. Nonetheless, I wouldn't be interested in trading this until it got above this candle here, a high of 77.06. And anything north of 77.06 on a consistent basis, I might consider this. But by and large, this is one that I just want to watch for next quarter, basically. So let's go back to the list. And the next one on the list is Magellan Midstream. MMP is the ticker. And for the year of 2013, instead of $2.22, they say they're going to do $2.25. As we look at their event, we see that they guided 3 cents above this morning and, of course, beat by 3 cents. It's amazing how you can live up to your guidance when you're going to be giving it in 10 or 15 minutes later. All right. You probably hear the frustration in my voice. It's just that time of year. We have a lot of fish jumping. Very few are worth catching. But that's okay because the ones that we do catch just really pay off. I remember First Solar, for instance, just here about 3 weeks ago. That thing is still performing like a champ. And I continue to remain in the trade. They announced their earnings on May the 6th here, coming up next Monday. And I think we're going to get a pretty decent pop when they do announce. At which time I'm probably going to liquidate my position, turn it back into greenbacks. So let's go over to a chart because we always look at everything and MMP is no different. And the year-long chart also reveals a good, healthy climber. If we drill down and look at a little bit tighter chart, we see that this thing has actually been trailing off over the course of the last few days. And trailing off here after announcing their better than expected numbers and on relatively high volume. So once again, not interested. Might be worth looking at in the future, but I don't see any short-term money right here, right now. Back to the list. And the next one is Lincoln Educational Services, LINC. Let's take a look at their event. Instead of losing a nickel, they plan to break even, maybe even make a nickel. So this is probably not one we're going to be terribly interested in. They did, in fact, announce this morning. So let's go have a look at a chart. And we can see here that Lincoln is ranging a bit, forming a pretty compelling head and shoulders pattern here, indicative of a stock that's probably headed south. As a matter of fact, this is one I might even consider going short on below this number here, which is $5.07. Now, naturally, it's not above $17. We wouldn't trade it anyway. But just looking at the pattern, that looks like a head and shoulders pattern. If we go over here below the neckline, that thing is probably apt to go back down into this range and find this support again. Target would be about $3.67. It's not my game. It's not the kind of stock trading that I do, and so I'm going to leave it alone, but hey, just food for thought. Let's go back to our list. And the next one on the list, my good old buddies out here in my neck of the woods, just about 5 hours north of me here, which is Nu Skin, ticker symbol NUS. Now, they have done really well in the past. Nu Skin, I'm relatively fond of this organization. The street says they're going to do $3.99. They say they're going to do between $4.18 and $4.30. Once again, I'd be very surprised knowing this company as I do if they didn't just announce this morning. But let's take a look. And yeah, there you have it. Announced May 2nd. Nonetheless, maybe these guys are coming back to life again. This is not a bad organization to be trading. Let's go over and look at a chart. And wow, isn't that interesting? Looking at the year chart here, you have this really tall shadow on this candle here back in August with a high of 56.52. But this new one just coming recently is 56.78, actually beat it by 20 cents. So odd looking as this chart is, we have a new 52-week high here, boys and girls. Now, unfortunately, it came on pretty sparse volume down here. If you'll notice, this high, whatever drove this up, and I can't speculate on that, came on quite a bit of buying pressure down here before it realized some selling pressure, and of course, just became a shadow and not a candle. But this one looks a little bit like a spinning top, got to tell you, which is not a real good feeling. But this is definitely one worth watching. Maybe this thing's coming back. Let's drill down, have a little closer look, and see what the 5-day is doing. And the 5-day shows a little bit of a breakout. Look at that. That's not a bad looking chart. We're coming along here. All of a sudden, we bust up on better than expected earnings. We retrace, but we don't dip below the original entry point here. If you see the low there is 51.56. This candle dropped all the way down to 52.33 before it started to rebound. And so over here at 54.13, that might not be a bad little entry place, given that our support, or in this case, our stop loss, is only down here at 51.56. So this is one that I am going to possibly look to go long on in the next few days. I'm going to watch this maybe until Monday and see how it does. But this is a pretty good looking chart. See, we just got to keep on fishing. Now, here's the bad news. The bad news is once it settled down, so did the interest settle down. You look at that, right? The volume is way down. I would rather see it where the volume bars remain high, just to indicate that there's a little bit of profit taking going on here, and it's not just an interest of there's not enough money at the table. But hey, it's well worth keeping a look at. I'm going to keep a very keen eye on Nu Skin for the next couple of days. And if they start to trend back upward on Monday, then I'll set an order entry limit to go long, looking for a target of at least the top of this new 52-week high, which is about 56.78, and see if we can squeeze a couple of dollars out of this thing on an option. Okay, let's go back to our list. And we can see the next one on the list is Activus ACT. Have not traded this one. For 2013, they're saying instead of $8.11, according to the mathematicians, they're going to do between $8.10 and $8.50. So that's a pretty broad range, even when you're talking about earnings per share up in the $8 range. But let's go and see what their event looks like. And we can see here that they too announced this morning before the market opened, said they were going to beat by 11 cents, and woo, they'd made their numbers, right? Let's go over and look at a chart, because just as Nu Skin surprised us, this one might as well, and we look at everything. And the yearly shows a good steady climber from about a year ago, almost a year ago. And it shows a new 52-week high right over here at about $110, $110 and a half. And that happened on pretty substantial volume, if you look at this volume bar, compared to the balance of the chart. So this is a pretty good looking chart. Let's drill down. And the 5-day is, in fact, pretty interesting, although not for the reason I thought it might be, because the gap up actually happened over here on Tuesday, 2 days before they made their announcement, which is pretty odd. You know, it smacks of something weird going on behind the scenes. But it also says, hey, maybe somebody knows something that we don't. Now, this could be just legal insider trading. It could be institutions pouring in well out of the crowd because there's a loose-lipped CFO. Nonetheless, this is an interesting chart pattern to look at here, because we had the gap up, and then we stayed pretty well involved for a nice long run here. This candle forming the 52-week high, that high being $110.50, as we mentioned. So this is definitely one to look at and see if they have options available on ACT. I would definitely take a look at this, because there might be a little bit of money to squeeze out. Very safe money at very least. Here between the close of 106 and the new 52-week high of 110 and a half. That's pretty safe money, truth be told. So there again, just food for thought, worth looking at. I like that one. I'm going to have to consider that one. All right, let's go back to our list. And the next one on the list is NJR. We just talked about this. What was that, yesterday? Interesting. As a matter of fact, let's take a look. Let's scroll down here just a little bit. And you'll notice that NJR we talked about just a couple of days ago. Now, the event at this particular juncture was, of course, earnings on May the 2nd. Oh, I remember this one. This is the one that had a pretty interesting looking chart, but just no time to really turn a trade. Okay, let's back up. This is definitely one that we should perhaps take a little closer look at for the next quarter. They did in fact announce this morning. Let's look at their chart just by way of a refresher. And the chart, I think, looks like a longer term double top. I remember this one now. We were thinking if this got above about 49 and a half, it might become interesting. If it got over here above this high point here. But it looks like that is not going to happen. It actually seems to have tucked its tail and run after the earnings numbers were given. Just for fun and in the interest of being thorough, here's a 5-day chart. And this thing is taking a little bit of a turn southward. It looks like that double top is in fact going to come into fruition, and it looks like the institutional money is going to pull out of this thing. And so I don't think we're going to see that $49.5 figure that we were looking. So we can cross that one off the list and we can keep moving forward. The next one on the list, Becton Dickinson, BDX. And for 2013, instead of 571, they're going to do 572. All the way up to 575. Now that seems like a tight range, but what's interesting about numbers like that is that tells me, and it tells the institutional trading desk, that this is a group of management personnel who really have their finger on the pulse of what's going on in their company. It's not an obnoxiously large range. And so it sounds like maybe somebody over at Becton Dickinson knows what's going on with their company, which is always refreshing to find. Let's go in and see what their event is. And they did in fact announce this morning, said they were going to beat by 4 cents and beat by 4 cents. Well, let's look at a chart and see how they've been doing recently. And for the year, they've been on a climb. They've definitely been on a climb, just rolling upward here, upward, 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 upward. Looks like they might have run into a little trouble in this neck of the woods with that little bit of a double top you're seeing there, but overcame that double top with this number right here, creating a high of 97.98. They actually got above that double top, and this is one that could be going for a little bit of a roll. Let us just drill down to that all-important 5-day chart. And as we see the 5-day chart here, we see the kind of stuff we like to see. This is exciting, actually. This thing is rolling off very clean, very tight, better than expected earnings. Big jump up, another big candle up, and now we see a little bit of a bull pennant forming. So this is good. This is one that we definitely want to look at trading. Now, we need to check and see if we've got options available on Becton Dickinson. I have not traded this one in the past as I remember. So for those of you buying stock, this might be one worth getting into. For those of you like me looking at the options, we'll have to do our options homework and see what's available. But with this new 52-week high, and granted it's just a shadow, but it's a shadow that happened on some really tall timber down here. I mean, this is some decent looking volume compared to what it's been traditionally doing. And bear in mind that it doesn't necessarily move easily, you know. If you look at this big volume bar back on the 30th here a couple of days ago, there's just as many buyers as sellers. Look at the candle associated with that big bar. I mean, what that flat candle tells me was that in the face of all this volume, there were just as many sellers as there were buyers, and it finished just slightly up. Whereas over here, not quite as much volume, but we were able to drive it up by about $2.50 in the space of an hour, not counting the big fat shadow. So this is one that I'm looking to potentially go long on. If we're able to get in here in the neighborhood of that $96 mark, I think at very least we could push this thing up to the 98 mark and be in a pretty good position to make a little bit of money. So I like BDX. I like that chart. Let's go look at the next one. And the next one is STRA Education, STRA. Instead of the $1.35 the street thinks they're going to do, they think they're going to do between $1.37 and $1.39. Let's look at the event. And it looks like they announced this morning and that they beat their numbers by 13 cents. Pretty decent move, but then they're only talking about the quarter here. We look at everything, let's go look at a chart. And we look at the year chart and, ooh, kill it with fire. This is ugly. Oh my goodness. Man, I'm glad I don't sit on this board of directors. Look at this. Wow. Last July, we're sitting at 110.35 on the open. Currently, after beating our numbers, we're at $45.99. Oh, bless their hearts. Let's look at a 5-day chart This is like a train wreck you just can't take your eyes off of. Can't look away from it. Oh, so much for beating your numbers by 13 cents. These guys are taking a bath. Woo! Okay, well, needless to say, this is not one I'm going to be trading, not anytime soon. This is like catching a fallen knife. This is ugly. So let's go back to the list and waste no more time on STRA. And the last one down here with numbers is Biomed Realty, BMR. Let's look at their event, and we see that they beat by 5 cents here yesterday, and they're guiding above consensus today. So this could be an opportunity, could be a cart ahead of the horse type situation. Let's go have a look at a chart here and see if we can figure out what's going on. And the chart shows a pretty decent climb going on through the course of the year. And it shows a 50-day moving average that has been above the 200-day moving average since back here in August. So interestingly enough, this is a climber. Now, something else to consider here is the fact that they are in the world of real estate. They're a realty trust, a real estate investment trust. That's the REIT. And real estate has been making a comeback at large for a very long time now. I mean, it's been a pretty good year for bouncing back from a fairly devastating couple of years predicate to that. This represents a new 52-week high, but my experience with real estate investment trusts is that they tend to stay relatively flat, and this looks flat as a pancake on top. If we drill down to the 5-day chart, we see that yes, this is relatively flat. Very, very tight range, ranging down, and the better than expected earnings popped it up a little bit. Of course, you're announcing the same day, so that's not going to instill a lot of confidence in the big institutional trading desks. But nonetheless, I don't really see a lot here. I'm working on a paper about the real estate situation and about its pending comeback, if there is such a thing. I haven't found a lot of evidence, honestly, to support the notion that it's making a comeback. But I'll continue to work on that, and I'll send it out to all the private clients just as soon as it's ready. So that's a day. That's a day in the life, right?